Okay, welcome everyone to the latest module. We're going to be covering the cake model. So you can find this in level 3 of the cookbook. And here it is. So, welcome to the cake model. Here in this module, I offer you my favorite and most profitable trading model. I truly believe this is the simplest and the most powerful system I have ever developed and is the absolute cornerstone of my daily trading activities. Okay, so stage 1, bias. I use 3 simple methods of determining bias. The first is swing formation. Using aligned timeframes, I look for the following sequence of events: a sweep of a high time frame candles, high or low, an aligned low time frame CISD, and a close inside candle one's range. Okay, so this is what a swing formation looks like. So stage 1, we've swept the high time frame candles high. Stage 2, we've got, well, step 1, step 2, step 3. Step 2, we get the CISD with the aligned lower time frame, and then step 3, we have the close back inside that range. So you can see this is like a 3 candle structure. We've got candle 1 that we're using for the sweep, candle 2 that takes the sweep and gives us the swing formation by closing back inside, and then the third candle is the one that we trade. Okay, so just a reminder, these are your aligned time frames. The bottom number is our high time frame candle we are framing. The top number is the aligned lower time frame. Okay, so this is a bearish example right here. This is a weekly swing with a 4-hour CISD. Okay, so refer to candle framing. If I were to ask you to just look at these high time frame candles and tell me which level you would expect to get hit, what would you say? Well, you'd probably say the red one, the bottom, the low, previous week low. So this swing formation now provides me with the bias for the next week. This bias is to the previous week low. Okay, we used the swing formation confirmation to determine our higher time frame bias, and you can see there was our swing formation and that was our bias we run for weekly lows. So a little bit of nuance to this. This is the same across all aligned timeframes, from the 15-second and the 5-minute to the 5-minute and the 1-hour and the daily to the monthly. Price is fractal. Okay, so we're just looking for that higher time frame candle, look for that sweep, then looking for the lower time frame CISD, and then to close back inside that candle's range, the one that we've just swept. Okay, so you will often see me trade the CISD / swing formation before we have had that step 3 confirmation. This is an aggressive entry and part of the risk in trading, I believe. It is not a true swing until the close has occurred. But why do I do this? I only do this when I have a very nice setup and a high probability draw on liquidity, which leads us on nicely to continuation candle, which is the second method of determining bias in stage 1. Okay, so we all should know what this is by now. You know, if you don't, please refer to the Merlin module. I go over it in depth over there. But continuation candles are a probable DOL, draw on liquidity. They have a statistical edge, and thanks to Merlin, we can easily spot these on any asset of our choosing. Okay, in this example, we have a daily continuation valued at 65% probable from 1,500 data points. You may recognize that. Okay, so these are our daily candles on the right, which means that these must be 1-hour candles on the left. Okay, the 1-hour and the daily align together. Okay, I will now only consider short opportunities for my daily bias. Okay, couldn't be simpler. Retard mode. The third method of bias determination is, again, one you'll all be familiar with, and another draw on liquidity type is EBP. This has its own module, so you can click into that module. You can watch that module again if you need to. And again, I go over it in Merlin. So this is actually quite a fun example because we have a swing formation, we have a continuation, and we have an EBP. So what's our logical bias here? Well, it's going to be to this low, isn't it? And of course, the lows, of course, get taken. So I pasted the wrong fucking screenshot there. I show this example again in a minute. I'll fix that. This was from the previous one. But yeah, that low got taken anyway. I'll fix that. Invalidation of bias. So in terms of when this bias is invalidated, because obviously, there's got to be losers. No system is perfect. Our only goal is to execute a repeatable system with probabilities in our favor. Nice tagline I like, which is the outcome is out of our control, but the probabilities are in our favor. All three methods of determining bias can be boiled back down to this image, okay? If we determine a bias to the red line, then price taking the green line first invalidates our bias, okay? So if I say I've got my bias to the red line, and we then go and take the green line before we do it, so we don't take previous week low, we take previous week high instead. That's the invalidation. It doesn't matter whether it's a continuation candle, an EVP, a swing formation. All we're doing here is we're determining whether the high time frame candles, high or low, will be the first to be taken out, okay? And then we're using the lower time frame information to help us get there, okay? So how can we help ourselves to get there? Well, stage 2 is value, okay? So I use a very simple method of determining value. Go and watch the premium discount module. The link is right there. But very, very simple. Buy low, sell high, okay? I use the 50% as my criteria. I don't give much value to any particular fib. I only care about the efficient exchange between buyers and sellers. One of the reasons as well that I only really care about the 50% is because one asset might like the 618, another asset might like the 886, but in reality, it doesn't really matter. They've all crossed that 50% line, okay? So I'm just looking for the efficient exchange between buyers and sellers, premium and discount. Buy low, sell high, okay? That's what we're looking for. By the way, this is that example from Farcoin. So this screenshot here, that should have been right here. So I'll fix that. 75%. So, power 3. Be the wick, my friends. If you seek higher prices, maximum opportunity lies below the open. Inversely, if you seek lower prices, maximum opportunity lies above the open. Okay, more on this in candle framing. I don't need to go over this right now. I've already covered every element of what you're seeing right now. This is just the overarching framework. Okay, I consider both. So this is more nuance. I consider both premium and discount of the high time frame candle we are framing and the swing range. Okay, so we will let the confirmation in stage 3 tell us when to react. Again, more on this in premium discount in terms of finding that swing range. So stage 3, execution. So how do we get in? So I use a simple methodology. And let's refer back to the time frame alignment chart, okay? So let's say I determine my bias using a high time frame 4-hour candle, stage 1. I would then wait for price to enter an area of value by interacting with the 50% of my premium and discount range, stage 2. Okay, so I'm looking for a 4-hour bias. I will then utilize a swing formation on the next time frame down, the 1-hour swing formation, as my entry. Okay, so that would be stage 3. So if I'm looking at a 4-hour bias, I want to see a swing formation on the 1-hour after stage 2 has been completed. So stage 1, determine the bias. I'm looking at H4. Stage 2, find that value, look for the 50% to be interacted with. And then stage 3, look for the next time frame down on the H1 for that entry confirmation. Okay, so really, really simple. If my bias was determined by a weekly, I would use a daily swing formation as my entry confirmation. If my bias was on the daily, I would use a 4-hour swing entry. If my bias was on the 4-hour, I would use the 1-hour swing entry. If my bias was on the 1-hour, I would use the 15-minute swing entry, etc., 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 all the way down to the 5-minute and the 15-second. It doesn't matter. It's all the same. Okay. So here's an example of a daily bias with a 4-hour swing execution. Okay, so this is our daily bias here, this level. It's been determined by a continuation candle, saying 65% on the daily candle. We then allow price, so that was stage 1. We then allow price to enter an area of value, stage 2. And then stage 3, we use the next time frames down and look for a 4-hour swing formation. So we've used daily information to determine the bias. We've then formed a area of value or a zone in which we want to trade from, stage 2. And then in stage 3, we look for the next time frame down from the daily, which is the 4-hour, and we look for a 15-minute CISD 4-hour swing formation. Okay, so that swing formation has to follow that 3-step process. Okay, sweep the high time frame candle, form a CISD, and close back inside. Okay, so this is the framework. Okay, so here is a very, very simple framework, and you can see it's pretty much exactly what you're looking at right here. This is how we would use this model. It couldn't be simpler. It really, really couldn't. Okay, so in terms of our bias, we're not always going to get it. In terms of the entry, sorry, we're not always going to get it on the first attempt. You know, we're not going to be bang on. Sometimes we're going to get taken out first. So our bias is still in play so long as we don't hit the invalidation. Okay, so therefore we can always reattempt the trade. So you can see in this example, the first attempt gets taken out. The second trade goes and gets it. So long as we don't hit that invalidation level, which we determined in stage 1, then we're gravy. We can keep going. Okay, so some more nuance on this as well. Utilize the Spitfire OB module, which will help you in refining your entries using CISD, OB, and breaker blocks. So these can be really helpful for those backtest entries if you're not so comfortable with entering at market from CISDs. That will really, really help you in getting that down. So another thing is it may take more than one attempt to get your entry. Don't be discouraged after one loss, but you should very much consider your plan after that loss and take no more than 2 attempts, in my opinion. The rule of bias and swing formation entry isn't exactly set in stone. If you wanted to be more aggressive for higher risk to reward, you could take an entry on an even lower time frame, 2 steps down instead of 1, for example. So if I have a 4-hour bias, I usually look for a 1-hour swing formation as my confirmation to enter. But let's say I see a 15-minute swing formation form. Okay, I may choose to enter on that, and that will give, that will be a much more aggressive entry. I'm just gonna be attacking with a, better risk to reward, but I'm also, due to that aggression, I'm more likely to be taken out. Okay, so this is a balance you need to figure out. So this isn't recommended unless you are more advanced and have a very, very strong percentage bias. I would only ever do that if I had a really, really strong bias in a particular direction and I really like the zone, I really like the reaction, yada, yada, yada. Okay, so that kind of goes on to this next point, is why are there nuances in this? Well, this system / framework is rigid or mechanical, and that will benefit many people who need that. But as we know in trading, there is always going to be an element of discretion or intuition, which we build and refine over time. This framework will allow your intuition to run at its max capacity. Use it wisely. The model is applicable to all markets. It's fundamental in structure and time. Okay. Now, a little bit of bonus content before I leave you. The past couple of weeks, and particularly this week, I've been discussing this very topic in depth during Q&A segments of our trading streams. So go back and watch the recordings for more in-depth reasoning. These streams were the reason I decided to immortalize my model for all the pilots to learn from. And yeah, recently I've been trading a lot more altcoins, as active members will know, utilizing our screener. For more on that, check out the below streams. You can see that these are the streams in which I've been discussing these topics quite in depth. And of course, little plug there for how epic that call was yesterday on ADA. And finally, here's just some statistics about how this applied to NQ. So below you'll find TradeZeller backtesting session I did exclusively for the cake model, utilizing 4-hour bias and 1-hour entry confirmations on NQ. And there was over 20 plus trades there across March to April 2025. And that is it. Thanks for listening. And any questions?